well. I have a bunch of crypto trades levels that I'm actually looking to buy at. So again, contrary to popular belief, I am not an all-time bear. Bottom line is, I'm a trader. So when the charts tell me to be bearish, I'm bearish. When the charts tell me to be bullish, I'm bullish. And ultimately, there are some levels I'm watching on crypto that are actually getting intriguing. Yes, I have a short signal out on Bitcoin. We're in the money on that. Same thing on Ethereum, in the money on that. But there will be levels I cover, and then I flip it to the long side, and then I'll flip it to the short side again. Again, like I said at the beginning, I can make 100 times more money than a buy and hold investor.
President Joe Biden, with unwavering confidence, took a decisive stance to end the standoff with Republicans and avert a potential default. The impact? Market sentiment skyrocketed, sending shockwaves of excitement through the financial realm. And guess what? Bitcoin, the powerhouse of the crypto market, wasted no time in capitalizing on this surge of optimism. It soared by a staggering 1.5%. breaking through barriers and reaching a remarkable milestone of over $27,400. This is a testament to the sheer resilience and potential of Bitcoin, proving once again why it continues to capture the imagination of investors and enthusiasts alike. Get ready to witness the unstoppable rise of digital currencies. Hello and welcome to Crypto Street. In this video, we'll be exploring the expert perspective of Gareth Soloway on the future of Bitcoin, accompanied by a comprehensive analysis. So let's get started.
All right, now we're going to get into crypto. I know everyone waiting for my crypto analysis, or at least most of you guys are. Some of you guys may not be. All right, what we have here, guys, here's your Bitcoin chart, all right? Now, I'm going to move this trend line. I want to show you the trend line I'm following here. This is the one I've been talking about now quite a bit. What we do is we just put a trend line right there. What we can clearly see, pivot low right through here, and then it went right through that top. To me, this is a bear flag on Bitcoin. Bear flag on Bitcoin starting to inch lower. Now, notice how bank stocks are up today and Bitcoin is down a little bit. That makes sense. Remember what happened when banks were collapsing. Banks collapsing, Bitcoin went up. So you're seeing the same pattern take place here where they trade inverse. All right, now again, the bear flag to me has me positioning for a target of around 24,800 to 24,000 as a first target range. So I'm still in the camp that this is going lower. I was the only one, or one of the only ones out there. Maybe there was one more person in the universe saying 30,500 would be the resistance and the pullback. That was obviously dead on, folks. Again, you have to be blind not to see that was a dead on call there. Now I'm saying that, again, we are still going to head lower, but the next stopping point is right in the 24 to 25,000 range. Now, like I said, there are levels where I would start to go long. For me, where am I looking to potentially go long? Very simply put, if we bring a trend line right up here, you're looking at around 23,000. 23,000 would be an opportunity for me on the long side. And again, that's where I would start. So yeah, first target's 24 to 25, but ultimately, if we flush enough, I'm going to look to go long for a bounce. Now again, please understand, I'm not a long-term investor yet in Bitcoin. Yeah, I have a tiny HODL position that I bought back in the 17,000 range. We talked about that when it happened. But again, that's only a tiny position. It wasn't what I intended to accumulate. Based on the charts, this is still a bear market rally. Now, again, I know your heartstrings, your gut, everything might tell you otherwise because you go on Twitter and you go in social media and you're so influenced by the influencers out there that you just can't hold your horses and you think it's a new bull market. Charts to me are everything. You guys can do that if you want. I'm fine with that. I look at the charts because I've made more money following the charts than really anyone in this day and age, right? I mean, I'm a chart guy. You guys know that. I'm neither emotional, I'm neither bullish nor bearish. It's just a matter of the levels.
When it comes to Bitcoin's price chart, the technical indicators are painting a fascinating picture. They point towards a bearish target of $25,000, a psychologically significant level that could potentially be reached by June. However, there's always room for a twist in this dynamic market. If Bitcoin manages to defy expectations and surpass its 50-day EMA, it could invalidate the bearish setup and pave the way for an exhilarating bullish run toward $30,000 by June. The potential for both upward and downward movements keeps us on the edge of our seats, reminding us of the ever-changing nature of cryptocurrency. But that's not all. Bitcoin faces another challenge on the horizon. A series of robust U.S. economic data has reignited the possibility of an interest rate hike in June. This development has cast a shadow of uncertainty over the crypto market, as Bitcoin's potential drop in May can be attributed to this looming possibility. It's fascinating how the global economic landscape intertwines with the crypto realm, creating a whirlwind of excitement and anticipation for what lies ahead. Now, let's shift our focus to Ethereum, the vibrant counterpart to Bitcoin. Ethereum has recently encountered its own set of obstacles. Low trading volume and a significant movement of Ether to centralized exchanges have affected its price. As if that wasn't enough, lawmakers in the United Kingdom have added to the pressure by calling for crypto assets to be regulated as gambling due to their perceived high-risk nature. This wave of negative sentiment has had a ripple effect, triggering a series of Ethereum leverage liquidations. In fact, on May 17th alone, a staggering 26,158 traders were liquidated, with losses totaling a jaw-dropping $56 million. It's a stark reminder of the volatile nature of this market, where fortunes can be made or lost in the blink of an eye.
All right, so again, we know the levels on this. Take a look at Ethereum here. I'm just going to go over a couple crypto charts here. Crypto, look at this. Look at the parallels. I'm a huge fan of parallels. Start drawing your parallels, guys. Check this out. Here you have a bear flag starting to form, beginning to downtick on Ethereum. Where's your next parallel? Down here around 1,600 or just below. To me, that's where it's likely headed. All right, so again, bear flag is bearish. I mean, again, I'm not making this up. Go in any textbook. Look at these stuff. Bear flag is bearish. That's why it has the name. Target for me, you're going to look at around the 1,600 level. There'll be some support around 17 or so, but we kind of already kissed it at this low. So you're now looking at that 16, 1580 level.
As the anticipation of another interest rate hike looms large, the U.S. Treasury yields have surged, igniting a renewed demand for the U.S. dollar. This intriguing development sets the stage for a potential challenge ahead for Bitcoin. You see, Bitcoin, known for its inverse relationship with the greenback, could face headwinds if the dollar strength index enters a new bull phase. The ripple effect of these macroeconomic shifts on the crypto market is a fascinating phenomenon, offering a unique perspective on how the interconnectedness of global financial forces can shape the fate of digital assets. We've unraveled another layer of the intricate web that binds the worlds of traditional finance and cryptocurrencies together.
And I'll leave you guys with this. All right, I don't trade where I go all in at any one spot. The reason I don't do that, even if I really love the level, is because I've loved levels before and they've failed. And so I'm a defensive trader. When you become a defensive trader, you will make 100 times more the money that you made before. I know it sounds weird. Oh, wait, I'm buying less, but I'm going to make more money. You will. The reason you will is because when you're wrong at the first level, it allows you to trade around the position. All right, and that means adding a little bit here. Now it goes back to your break even. You can sell a little bit there. Then you bring it, then it comes back in. You add a little bit more. Ultimately, you're working your average. Think about kneading bread or clay or anything like that. You're working it to your favor, and that is the key. So the more defensive you are, the more you kind of question your level, even if it's a great level, the better you're going to be in the long run as an investor and trader.
Get ready to unleash your thoughts and join the vibrant conversation in the comments section below. We eagerly await your insights on the future of Bitcoin. Your perspective matters, so don't hesitate to share it with us.